Hello, everybody. This is Elizabeth Clare Brewington with Discover Brightside, the video podcast and network. And I am delighted to talk about emotional intelligence for prosperity. We've been doing emotional intelligence for the last 4 months, and we have some wealth experts to help you get to a prosperous life. Now, many monks and gurus and learned academics will tell you that yes, it's important to know yourself and love yourself. Yes, it's important to find a soulmate. Yes, it's important to find love. Yes, it's important to be peaceful. Yes, it's important to be happy. But when you get wealthy and you get all the things that I just laid out, that is your highest attainment of life. So here we are with some wealth management experts, and we're launching two fabulous new books that we want you to buy and write reviews for. And I will tell you that in a moment. But first, without further ado, I have George, who is the Chief Investment Officer for VIM Wealth Management. So, George, tell us a little bit about yourself and share your journey with us.
Yeah, of course. First and foremost, thank you for having me. I'm appreciative to be here. I have about in February will be 21 years in the industry and banking and wealth management. So I've spanned the gamut of working with clients, from very wealthy clients to not so much, and everything in between. What I focus on is financial planning, and that's making sure that clients are invested correctly and that we have a plan in place to make sure that they reach their goals, accurately and without taking, any unneeded risk.
Wonderful. Now, we had talked earlier and we had talked about the sweet spot of 50,000 and above. And so,
Mm.
if somebody is transitioning from a military job or a government job or a corporate job, and they have made savings, or they're selling their home in this fantastic seller's market and cashing in on the value of their homes, with a $50,000 investment and above, how can VIM Wealth Management serve those investors?
Yeah, that's a great question. Now, if I'm not going to give you an exact, buy X stock or buy Y stock, just because, I think I would be doing a disservice to you and to your listeners, because I don't know what everyone's risk parameters are, what their situation is in particular. And that's why working with a financial advisor or a wealth planner is important, because, especially with the financial plan, we get to know you and whatever your goals are. What you had mentioned before about wealth and being wealthy, that term wealth is different for everyone, right? So what wealth is to one person, it's completely different to other. And that's something that I've been able to see over my last 20 years in the industry, is that everyone looks at money differently, right? So everyone's retirement is different. Some people want to retire with Lamborghinis and yachts, and some people just want to go, out into the Amazon and be a nomad, right? And those goals are completely different, and those two people need to invest completely differently. So that's why it's important to have a financial plan in place, and that's why I focus on the financial plan, to make sure that you're invested correctly for your goals and not just some arbitrary goal that a financial advisor might say you need X amount to retire.
Fantastic, fantastic. And then, how do you align your investment strategy with your long term legacy?
Yeah, so that's where the financial plan comes into place, where we look at whatever your goal is for retirement, right? Let's say your retirement goal is to retire at age, let me just throw out a number, 65 years old, and spend $10,000 a month in retirement, right? What we do is kind of back into that number. We figure out what it is that you need to be saving on a monthly basis. If you're younger, obviously the more time we have to plan, the better it is, and the quote unquote easier it is, because you have more time on your hands. You have longevity, and you can start saving earlier rather than later. But that doesn't necessarily mean that it's never too late to start planning, right? My clients span the gamut. I have clients that are 18 years old that just started and are good savers, and then I have clients that are 60 years old that are trying to figure out, can I retire in 5 years? Can I retire in 2 years? and even older clients that are already in retirement and trying to figure out how much can I spend. So getting that plan in place and making sure that you're saving enough or not spending enough, right? A lot of people think that because they make a lot of money, that's great, but I don't really care how much money you make. That means absolutely nothing to me. It's how much money you spend or how much money you save. That's the number that's important. Because if you make $1 million a year and you spend $2 million a year, you've got nothing, right? So the important part is how much money you spend. Being frugal or just living within your means is the most important part of the financial plan, and that's the hardest. That's the hardest thing to teach.
Now, I know that this is an emotional market because of the economic downturn. People are losing their jobs. People are losing business. What do you think is sustainable? Because if you have 50,000 plus, where can they really think about what will last for a longer time?
Yeah. Listen, the market has been absolutely crazy over the last couple of years. Ever since 2020 with COVID, it's been an up and down market, and I think what's important is to take a long term time horizon on it, and just kind of step away from the noise. We're in a very very noisy environment, and with the media and social media and stuff, bad news sells, unfortunately, and that's all you're going to get. So if you just watch TV, you're going to think the world is on fire, and maybe it is, but maybe it's not. So the way that I'm looking at it, the way that I tell my clients is, let's have a long term time horizon. And right now, where you want to be is probably in the tech sector for the most part. These are the companies that are moving, the ball forward, and it's just what's doing well right now. And what's important is trying to stay ahead of it. Eventually, the tech sector will not be the best sector. It could be next year, it could be 10 years from now, it could be 50 years from now. We don't know, but staying ahead of it, having a well diversified portfolio, not only being in one industry or one stock or anything like that, is important. Uh, in a well, maintained portfolio.
Fantastic. So, what distinguishes VIM Wealth from other advisory firms, and how do people reach you and get a consultation? And listen, if you have less than 50,000, do not worry, George, because he cannot do much with less than that because this is a special audience that this segment is for. So, George, tell us what distinguishes you from other advisory firms.
Yeah, I think obviously my experience is one thing. I have a vast experience in the banking sector as well, so I kind of help my clients be more of their family CFO, if you may, where I kind of help with all facets of their financial picture. A lot of people in my industry do not do financial plans, and I think that is one area where I think we're severely lacking as financial advisors, and not just giving out random advice that might not fit for the client. So the financial plan, I think, is somewhere where I strive, and I do really well there. Returns are going to go up and down. I never promise a return, and that's, if anyone's promising you a return, please run the other way. Uh, the returns are going to go up and down, and our plan, our goal is to always beat the market, right? But that's not necessarily going to happen every single time. And on top of it, again, going back to the financial plan, you might not need to beat the market every time to meet your goals, and that might be okay.
Um, George, thank you for joining us. I'm so delighted to have you with us. These are quite amazing times, and when you're trying to turn your portfolio greener, I guess you'd say, I mean, and it demands that, of course, you're careful and you're aware, and that you see, and considering a growth agenda. Say, for instance, seniors now
Mm.
who've been put against the wall because of whatever issue or dynamics. Uh, do you ever suggest that I mean, what's your philosophy? Bounce back, remain consistent, or growth? I mean, depending upon, of course, uh, each uh, each perspective.
Yeah, that's a great question, and it's something again that I think my industry does poorly, where we try to put people in like buckets, or oh, you're 70, so you need to be 20% equities and 80% bonds. That's not uh, that's not correct, right? Maybe as you have a headache, take Advil type situation, but you might have something much worse or something nothing. So uh, I think it's important to understand your client, understand what it is that they're aiming for, right? This is where I hate to keep going back to the financial plan, but this is where the financial plan helps, and also where the client's risk appetite is. Me, for example, I'm a stock market guy. I probably will never own a bond in my life, only because I understand the risks that are associated with the stock market, and I'm okay with them. I want my money to grow, 8, 10, 20% a year. I'm okay with a 20% drop in the market. That's just, it is what it is. But some people are not. Some people, the market goes down, 25 basis points and they freak out. And to that client, that return is probably not worth them not being able to sleep at night or worried about their money every second, right? There's a little bit of balance there, and I think as financial advisors, not only are we financial advisors, we're a little bit of psychiatrists, psychologists, also trying to talk people off the ledge and tell them, hey, you know what, things are going to be okay over the long term. Things are going to be fine. They might not seem that way right now, and I think it's easy to look at things and be worried. But over the long term, things will be okay.
And thanks for that. I mean, I just have to squeeze in one last element because we do
Of
have
course.
a real estate person here. What's your perspective on the dimensions? Real estate seems to be holding steady for the most part. I'm recalling though a line in the movie Inside Man where the line was quoted: "When there's blood in the street, buy real estate." But what's your perspective on real estate and the dynamics for that and now?
Ye- Yeah, of course. I think real estate is a forever buy. It's always going to be a good time to buy real estate, right? There's absolutely nothing wrong with it. Are there better times than others to buy them? Sure. I think right now a lot of people are on hold because they're expecting rates to come down, and I think it's a reasonable expectation. With everything we see, we do expect rates to start coming down. And if I were looking to purchase a home, I'd probably say, hey, you know what? Let me wait for rates to come down, because a 1% difference in mortgage rates can be significant savings over time. So I always think real estate is a good purchase. Most people make most of their net worth is tied up to their home, uh, mostly because it's the most expensive asset that they buy, and mostly the asset that continues to go up in over time. So always like real estate. You can buy real estate without having to buy real estate. You can do it through REITs and ETFs and private type products that we offer as well. So there's other ways to buy real estate where you're not having to deal with the three T's. I'm not sure if you've heard what the three T's are, but that's tenants, toilets, and trash. That's something that a lot of people don't think about, and they think, oh yeah, I'm just going to buy an apartment and rent it and make a ton of money, and then they get that phone call at midnight that the showers overflowing or whatever. So it's not as simple as most people make it out to be, but there's other ways to invest in real estate without having to actually buy the real estate.
Well, thank you, George, and please stay as long as you can. We just ask you to stay for this hour. Thank you.
Sure.
So we get to a panel. Thank you so much. And
Thank you very
you're
much.
watching Discover Brightside, the video podcast, where we fine tune your lens so you can get smarter, sharper, and learn new things. So if you need to get in touch with George, he is with VIM Investments, and we will make sure that the links to his website are available to you. Get that financial plan and put a plan together and save more, because even though it's hard with the economic downturn, the more you save, the more you have. So thank you for watching.